What is going on with gold is the question many are currently asking. We have a perfect setup for gold, one would think, with the turmoil in trades continuing to escalate between the US and China. We have the stock market, which has been showing a wobble recently, and we got bond yields trading close to the lowest in 18 months. But nevertheless, we saw another big sell-off last week in gold during a week which actually started quite promising because the market moved higher as the trade war escalated once again. But what we're seeing right now is basically the positioning from hedge funds continues to be the main problem here. We've seen a very, very difficult trading year so far in gold. We've seen hedge funds selling at the lows, we've seen them buying at the highs. Last week was another repeat of this. Going forward from here, what do we think? Well, we think there's really not that much incentive to sell gold at this stage. The gold's biggest enemy right now is the fact that we have longs that needs to get reduced once again. But if you look at the overall global situation, we've got geopolitical risks in the Middle East. We have the trade war, if anything, continues to escalate. So on that basis, we see limited reason for selling gold at this stage. We're focusing very much on the Chinese renminbi. Remember last year, between March and July, gold sold off at the same time as the renminbi weakened. This time round again, we've seen the renminbi start to weaken again as China is trying to seek a response to the tariffs being applied by the US. On paper, that should be the gold negative, but we believe that if there is a break above 7, which is really a key level for dollar renminbi, then that could signal increased uncertainty in the market, and I think that could lead to stock market weakness once again, and potentially also thereby adding some support to gold. So we're keeping an eye on, so from a long perspective, we prefer to look at gold against renminbi compared to being against the dollar.